Hello dear students, welcome back. Today I am going to explain you journal entry of transactions related to assets, revenue and expenses. So here I have taken few transactions of question number 10 and question number 11 of your textbook on page number 104. So here is question number 10. Write journal entry for the following transactions in the books of Shri Lakshman Chandera. Here first transaction is a machine purchased by check rupees 20,000 and paid for machine installation rupees 500 in cash. Here our owner Lakshman Chandera is purchasing an asset which is a machine. First, let us recollect what we have studied earlier. See, we know that funds are arranged to commence business or for expansion of business. These funds are invested in tangible or intangible items. So, items for which these funds are invested are known as assets. And you must remember one thing. At the time of acquisition of such assets or purchase of assets, document expense, advocate fees, stamp duty, brokerage, etc. expenses are to be paid. All these expenses are treated as capital expense and it is added in the value of respective asset. You must remember this. So here our owner Lakshman Chandera is purchasing an asset which is a machine and he has also paid machine installation rupees 500 in cash. So let us see journal entry for this. Here three accounts are involved. Machine account, then as amount of machine is paid through check, so bank account and cash account. So let us see journal entry for this. Here is the answer. First we will write the heading. We'll write it as Journal of Lakshman Chandera. So here as you can see I have made 5 columns. So as we have seen, 3 accounts are involved in it. Machine account, bank account and cash account. So as we know, machine is an asset and machine is an asset, that's why it is a real account. So we will apply the rule of real account. So as per the rule of real account, which says that debit what comes in. So here machine is coming in the business and asset is coming in the business. So as per the rule, we will debit it. But at what amount will it be debited? It will be debited by rupees 20,500. See, as I told you, here if you see, though the price of machine is 20,000, but we are recording it at the price of 20,500 because as you can see here, owner has also paid machine installation charges, that is 500. So as I just explained you that in case of asset, if any expense is paid related to it, then that expense is added in the value of respective asset. So here we will not write the value of asset as 20,000, we will write 20,500. That means 20,000 plus installation expenses 500. Then next is bank account. We know bank account is a personal account and according to the rule of personal account, debit the receiver and credit the giver. Here first we decide whether bank is receiver or giver. Here payment is made through check. Our owner is making payment through check. So here bank is giver of check. That's why bank account will be credited by rupees 20,000. Now, cash account. Cash account is also credited here because as here owner has paid expense, that is machine installation expense rupees 500. So here cash account will be credited. Here generally we assume that small amount is paid through cash only. We do not use check for paying rupees 500. That's why here cash account will be credited instead of bank account. And here we will write narration being purchase of machine through check and paid wages for installing the machine. Now let us see next transaction. Third number, 50 shares of Mahalakshmi meal purchased at rupees 100 per share and brokerage 20 paisa per share paid by check. See, here owner Lakshman Chandera is purchasing some shares of Mahalakshmi meal. And if we purchase share, it is called investment. And investment is an asset. So, how many shares he is purchasing? He is purchasing 50 shares. And price of one share is rupees 100. He has also paid brokerage 20 paisa per share. And brokerage is capital expense which will be added to value of shares. See, brokerage is paid to broker. A broker is a financial intermediary or agent through which you can trade in stock markets. One cannot trade directly in stock markets. One can trade in shares or securities only through a broker. So the fee that brokers charge for providing their services is known as brokerage. As this expense is related to purchase of asset, that's why it will be added in the value of that asset. So here two accounts are involved. First is investment in share and bank account. So here investment in Mahalakshmi shares account will be debited as investment is an asset. So here we will apply the rule of real account, that is debit what comes in. Here asset is being created, asset increases. That's why it will be debited. Then as the owner has made payment through check, that's why here bank is a giver. So as per the rule of personal account, bank account will be credited. Now let us see the calculation of this amount. First see how many shares are purchased here. Here 50 shares are purchased. And what is the rate of one share? 100 is the rate of one share. So we will multiply it with 100. So we will get 5,000. Here owner has paid brokerage also, and brokerage is 20 paise per share. So how much he would have paid for 50 shares? So here we will write plus 50 shares multiply by 20 upon 100. As we know, there are 100 paise in 1 rupee. That's why we will write 20 upon 100 to convert it in rupee. So we will get 10. So by adding this, we will get 5,010 rupees. So here our value of share investment is 5,010 rupees. So here we will record 5,010 rupees as value of investment. And as payment is made by check, so bank account will be credited, right? Here if we think from modern approach perspective, then in that way also result will be the same. Here investment is an asset and the nature of asset is debit. So when asset increases, it will be debited. That's why investment in shares will be debited. And as bank balance is also an asset, so as per the nature of asset, that is debit. So here bank balance decreases. Bank balance is decreasing. That's why bank account will be credited. Now let's move to next transaction. Land purchased rupees 50,000 and incurred rupees 2,000 for documentation and legal charges. Payment is made in cash. So here also two accounts are involved, that is land account, and as payment is made in cash, so cash account. Here documentation and legal charges are expenses which are related to purchase of asset, that is land. So here these expenses will be treated as capital expense and it will be added in the value of asset. So our value of land will be 52,000. So here is journal entry for this transaction. Here land account will be debited and cash will be credited. Here land is an asset. So as per the rule of real account, which says debit what comes in. So here asset is coming in the business or asset is being created. That's why land account will be debited. And cash account is also an asset. So here also we will apply the rule of real account. So as per the rule of real account, credit what goes out. Here cash is going out of business as we have purchased this land by making payment through cash. So here cash is going out of business. That's why cash account will be credited. And in narration we will write being purchase of land, legal charge paid in cash. Now let us see few transactions from question number 11. Here is the question. For following transactions of May 2014, write journal entry in the books of Shashank. So here I have taken only few transactions. Transaction number 5th. Paid rupees 500 for shop rent, rupees 300 for house rent. To make it easier, first let us decide whether it is cash transaction or credit transaction. We can easily identify as here paid word is given. Whenever paid or received word is given, that means it is cash transaction. So it is confirmed that cash is going to be affected. Means cash account is going to be affected. So here cash account, then shop rent account, then house rent. That means it is personal expense of the owner Shashank. So personal expense, as it is personal expense, so we will name it drawing. So here drawing account will be affected. As here owner Shashank is making payment for his personal expense, that is house rent from business fund. So here drawing account will be affected. So here is the journal entry for this transaction. First here we will write journal of Shashank. Then date. Now shop rent. As shop rent is business expense. As it is an expense for the business, so it will come under the rule of nominal account, which says debit all expenses and losses. So as it is an expense, that's why shop rent will be debited by rupees 500. Then drawing account will be debited as owner has made payment for house rent, which is his personal expense. That's why here drawing account will be debited. Here we have applied the rule of personal account. Here owner is the receiver of benefit. Owner is using business fund for his personal expense. So as here owner is the receiver, that's why drawing account will be debited by rupees 300. Then cash account will be credited. Here we have applied the rule of real account, which says that debit what comes in and credit what goes out. So here cash is going out of business as owner has made payment for both these expenses. That's why cash is decreasing. So cash account will be credited. Here we will write narration, being shop rent and house rent paid. Now let's move to next transaction. 10th date, rupees 400 received for commission. So here again received word is there. That means cash account is definitely going to be affected as this is a cash transaction. As I told you earlier, wherever paid or received word, these kinds of words are used, it indicates that it is cash transaction. So here cash account will definitely be going to be affected. So here we are receiving cash. So here commission is our income. It is source of income. So here two accounts, that is cash account and commission, as it is income for the business. That's why commission account will be affected. So let us see journal entry for this transaction. Here as cash is an asset, so here we will apply the rule of real account. Here cash is coming in the business. Here owner is receiving cash as he is receiving income, that is commission. So he is receiving income in the form of cash. So cash account will be debited, and as commission is an income, so here we will apply the rule of nominal account, which says credit all income and gain. So in this way, as commission is an income, so commission account will be credited. In narration, we will write being commission received. Now let's see next transaction, date 12. A check of rupees 800 received for brokerage. So here, which two accounts are involved? Here first, brokerage account, as it is an income for the business, and as here received word is given, that means it is cash transaction. So it indicates that either cash or bank account will be affected. As here we are receiving the amount through check, so in this case bank account will be affected. Here one thing you must remember, transactions made through check is also a cash transaction. And as here we are receiving the amount through check, so bank account will be affected. So here is the journal entry for this transaction. Here bank account will be debited, as here bank is the receiver. We are receiving the amount of brokerage through check. So as per the rule of personal account, bank account will be debited. Then as brokerage is an income for the business, that's why brokerage account will be credited as per the rule of nominal account, which says credit all income and gains. Then we will write narration, being brokerage received by check. Now let us see next transaction, date 24. SR company has paid debenture interest by check rupees 1000. So here let us see which two accounts are involved. Here you first need to know what is debenture. See, some companies issues debentures when they need to borrow the money. A company can raise funds through the issue of debenture, which has fixed rate of interest on it. It is borrowed capital for company issuing debenture. Which company promises to repay in future. So here some other company has paid debenture interest. That means our firm would have purchased debenture of SR company. So now SR company is paying us interest on that. So it is an income for our business. So debenture interest account, and as we are receiving it through check, so bank account will be affected. So here's the journal entry for this. Bank account will be debited by rupees 1000, as here bank is the receiver. Here we are receiving debenture interest. It is an income for us which increases our bank balance. So if you see from the viewpoint of modern approach, in that case also bank balance is an asset, and when asset increases, here bank balance is increasing. So when asset increases, it will be debited. Then if we see from the viewpoint of traditional approach, in that case here bank account is personal account, and here bank is the receiver. Here we are receiving debenture interest through check. So bank account will be debited, and as interest on debenture is an income, so for this we will apply the rule of nominal account, which says credit all income and gain. So in this way interest on debenture account will be credited. We will write narration here, being interest on debenture received. So that's all for today. I hope you guys would have understood this. Thank you very much.